Hi everybody, Alex Explorer here from Expert Forex, and in this video we are going to look at 4 simple steps to find the best accounts that you can copy and link to. Now on the Link to Success service, this is the website for that service. If you scroll down, you get a list of the accounts that you can link to, but if you scroll down further, you get to a schedule that is the account risk analysis information, and that is the schedule that we will be using. So this is the schedule on your screen right now, and it is very important that you understand how this particular schedule has been created, because it is quite unique. It uses a unique method of analyzing results. So this account analysis is based on equity movements. Equity is basically your account balance less any floating balance or drawdowns. Those would be called drawdowns too, and that is where equity comes from. So if you take that balance minus that, that's where equity comes from. Now, why do we use equity? Equity is the amount you can withdraw from your account on any day. So it represents the actual profit and losses that you've made compared to the investment that you've made. Very, very important. So what we do is we record the equity balance of every account on a Saturday morning when the market is closed. And that is the balance that we use to do a lot of the analysis work. Those weekly equity balances are fed into the statistics and ratios shown on the account risk analysis. So this chart shows you how equity and your account balance can bounce around, and why equity is actually the most important thing to follow, because that is real money that you can withdraw from your broker account at any time. So the blue line here represents the account balance, and the red line here represents the equity balance, and the difference between them is the drawdown at any one time. And this particular account, you can see the balance goes up, the equity goes down, but they meet every now and then. So there's where they've met, there's where they've met, there's where they've met, and so on and so on. So this is quite a unique strategy that is being used here. And you can see that the equity and balances are a lot closer together here than they were further on. But to show you, so what we would take is we take the equity reading there on a weekly basis, and we would be looking 8 weeks back, and we would say, where was the equity 8 weeks back? Where is it now? So that is our true profit. We don't look at the account balance, we look at the equity balance. And then we come up with, as shown in the account risk analysis information, we then come up with a number that is the gains for the last 8 weeks. There is the number. We find that number by comparing current balance on equity with the equity balance 8 weeks ago. And again, to repeat, it is an accurate measure of the actual gains made over that period. The higher that number, obviously, the better, but you do need to compare it with the account size required, because in the link service you need different account sizes. Okay, so now that you know the basis of that particular schedule, let's look at 4 steps to select sound linked accounts. The 4 steps are going to be the percentage gains in the last 8 weeks, consistency and drawdown exposure, volatility and stability of the results, and we're going to look at the current drawdowns. But it all makes sense as I go through. Okay, so now in this table we have percentage of gains in the last 8 weeks. Now why that's important is that, as you can see, the account balances are completely different. Here's a 10,000, there's a 300. So to compare accounts on a like basis, we convert the earnings by relating them to the account balance. So that is 63%. That balance, although it's a lot smaller than that, that's 45%, because it's being related to a $300 account. That balance over there, that's much bigger than that one, is less because it's 43% because it's related to a $1,000 account. And why we do that is that if you were to join the service, you would be joining at the account size required. So all earnings should be related to the account size. We assume that people are joining regularly using that particular account size, and all traders of the link service assume that they are always trading that account size. In spite of equity being huge, like here in this case, $1,000 account, but the equity is huge, the trader doesn't trade as if he's got that a balance in the account. He trades as if he's got that balance in the account. So all of this allows us to compare investments from different account size requirements and is the best starting point for finding accounts to link to. So that's the starting point. The next step is to focus on consistency and drawdown exposure. We look at the number of negative weeks in the last 8 weeks. So in other words, you take the equity at the beginning of a week, the equity at the end, and if that number is positive, you've had a positive growth. If it's negative, you had a negative growth. So if the number is 0, it means that equity balance on the account increases every week over the previous 8 weeks. So there's a number of accounts there that have not had a negative week in the last 8 weeks. So that is a factor that we take into account, and you can see, you can sort this column and it goes down like that. There's 2 weeks and so on. But at the same time, we also look at a balance on the negative weeks. So there's a total of the negative weeks in those 8 weeks, and as you can see here, sometimes it doesn't matter much. If the balance is only minus $6, then it doesn't really matter. If it's that number there is 23% of the account, maybe that becomes a factor. So you have to relate the balance that has gone negative to the number of weeks. So we want a ratio where that balance is low compared to the number of weeks that are negative. Okay, then next what we look at is volatility and stability. So we look at 3 things: the size of the best week compared to the account size, the size of the worst week compared to the account size, and then we compare the best and worst week. So firstly, let's have a look at that top one there. The account size used is $10,000. The best week was a gain of 29%, and the worst week was a loss of 14%. So that starts giving us an idea of the volatility and stability of this particular account. Now, if you look at this one, for instance, it's a $1,000 account. It lost 57% of the account in 1 week. The worst week was a loss of 57%, and it gained 55% in 1 week. So this account is a volatile and relatively unstable account where you can lose half of your account in 1 week. Maybe that's not such a great thing. So that is why we look at these 2 columns and compare them. For instance, here's a nice one. It's a $1,000 account. The biggest loss has been 8%. The biggest gain, however, has been 35%. So those are the ratios you start looking for to determine which accounts you would like to link to. And then lastly, we look at the floating profit and loss. In other words, the current drawdown. Very simple. You look at that and also compare it with the account size that's required. And it is best not to invest in an account that has a large drawdown. By sorting this column from small to big, you can find accounts that have got very small drawdowns, and those are most probably more attractive than ones that are doing well. These accounts, look at them, they're doing well, but that particular one has a very high current drawdown. So those are the factors that we've gone through, the 4 factors. And then just to give you an idea, all those factors won't be perfect. They just won't be perfect. But what you can do is you can try and find accounts that are attractive. Although the gains for the last is only 11%, the drawdown is very low, no negative weeks, and the number of the best week is a good return on a $300 account. So that kind of account is attractive from a point of view that the risk is low and the gains are reasonable. Any gains over 5% a month are reasonable. Same here. This, in fact, is my favorite account because of these factors. No negative weeks, small gains but very controlled. The worst week is a positive week, never had a negative week, and the best week is a very nice positive one. So can you see how we looking at all the factors in one go? Let's go have a look at this one here. All right, it's had a negative week. It's only a 3% drawdown in that particular week on a $1,000 account. That's very good. A 16% gain, so the monthly return is roughly 8%, and a fairly small current drawdown. Let's have a look at the next one. Really good gain, really good. $1,000 account. Now here we're getting into a more risky field because the gain is higher, but that's basically a 17% drawdown in 1 week, but the best one is a 24% gain. Overall it was 53%, and the drawdown is acceptable. So again, you have to balance all these factors to decide whether you're going to be linking an account. Here's another one. Let's have a look at the last one. $300 account that's being traded. It created a 45% gain in the last 8 weeks. Only two weeks were negative, and look how small the drawdown was in those 2 weeks. That drawdown there is not too bad. It's under 10% for a grid type of account, so not bad at all. And so this is how you look at these accounts. I've only given you five examples here, but you take those accounts and then you shift through them and make a short list, and the short list becomes shorter and shorter, and then you get to the accounts that you want to link to. So in this video we've looked at 4 ways of finding suitable accounts to link to, but there are many other advanced techniques which I cannot cover in the space of this particular video. These techniques are studying the balance and equity charts in a little bit more detail, looking how smooth the growth is and the drawdown areas, advanced drawdown analysis. There are some charts in FX Blue that will give you advanced drawdown analysis. Balancing your currency exposure in portfolios. In other words, you don't want to be overexposed to the yen or the pound or the USD. There are also linking factors management. So in other words, you don't have to link using a factor of 1. You can link to using a factor of 2 or 3 or half. And a lot of traders use that as part of their strategies. You can scale most of the trading accounts. This is something that people don't know. You can actually scale most of the trading accounts for prop trading. All you need are drawdowns that are lower than your income. That's all you need, and then you can scale those and start using them for prop trading. Then there's the ratio analysis that we haven't spoken about, things like profit factors, etc. Then there is also the fantastic information available from FX Blue in their analysis and stats sections. And then there are actually many more ways that you can select accounts to link to. But the 4 ways that I've shown in the video will most probably cover 80% of what is required. And just a reminder, trading is very risky. Past results are not a guarantee of future results, and the markets can change at any time. Now, I hope you found this video interesting. I hope you've given you some ideas at what to look for to find robust accounts that you can copy and link to. So from me, Alex Deploy. So as always, there will be links to the account linking service in the description of the video as well as in the commentary, first commentary of the video. So from me, Alex Deploy, cheerio. Just a quick disclaimer, this video has been made as an educational, entertaining and informative video for its viewers. It is not personal advice, and what works for some traders might not work for you. Please consult your financial advisor before trading. Trading is very risky and you can lose all your capital. It is not a get-rich scheme. Past results do not guarantee future results. There is no guarantee of easy success or good results in Forex trading. You cannot achieve the same results in the future by simply copying strategies and settings used by other traders in the past.